didn't even say that we're live yet. What'd you say? Oh, like it just notified me that we're live.
The perfect storm, too faded and torn, hooked on the taste of the ash, so we fade to black. And we're burning out. We're close to the broken walls, so tainted and warm. We set fire to our house, now we're burning out. We're burning out. We're burning like gasoline. It's taking over, but we're lost in the beat. Yeah, you're our worst enemy. Like a wildfire in your brain. The passion is the flame, and we're burning out. And we're burning out.
Well, bro, currently I am going.
Hey love, don't you think it's time to make a change? There's so much in our lives to rearrange. Day and night I always feel the same. We got no one else to blame. Gotta move a little faster. Time to find out what we're after. Is this the life we should choose?
What up, what up, what up, what up, what up, everybody? Welcome, welcome, welcome to the Power Hour here with the Trade House and iMarkets Live. My name is Zachary, and if you're joining Jordan and myself for the first time, let us know where you're watching from. We got Dallas in the house, Toronto, Indianapolis, Portugal, Texas. I'm just taking a look at everybody that's already wrote. Slovenia is here. Definitely appreciate each and every single one of you that is tuning in to the session today. We're going to be continuing the theme with our technical analysis Tuesday. We got Florida here, Estonia here, Waterloo, Baltimore, Puerto Rico, Chicago, Hong Kong, Boston. Absolutely phenomenal. What's up, Poland? I see you. I see you guys. Much love. LA in the house too. And so with today, with it being Tuesday, as I mentioned, we're going to be doing some technical analysis. We're going to really quickly run through Forex Factory and whatnot. But before we do that, what's going on, Jordan? How are you? How was lunch, my friend?
Everything is good. Everything is good. Definitely one thing that I do want you to point out is this right here with Forex Factory. Right, just because it's just another add-on to what we're going to show here for more examples of how the markets are just manipulated.
And so we can notice that this was a surprise release. And it was actually scheduled about 2 hours prior to the conversation that was had. And essentially, what happened with this one, I know that you guys saw the volatility on GBP this morning. We had talked about the FU candle that it did pretty much on every single GBP pair. And this surprise economic event was essentially the Prime Minister coming forward. She was speaking. I believe that part of their new deal that she's trying to negotiate was a free vote, like another vote. So regardless, we talk about it a lot, but news is used as an excuse to move price from one point to another. And if we were to go and just take a look at the week, right now we're here. We're in the afternoon of Tuesday. Okay, so we have a little bit of stuff happening in the Asian market on the NZD. We're really only paying attention to the red folders. Okay, so if we wanted to, we could filter out all of the yellow. We'll keep the orange on there just to make it look like there's a little bit more going on. Looking ahead at Wednesday, though, we've got our typical GBP stuff happening during the London session that we got to be prepared for. And we also have some CAD stuff going on during the Open of New York, followed by the FOMC stuff that's going to be happening in the afternoon of Wednesday. On Thursday, it's pretty much a Euro-focused day. There's going to be a lot happening. Potential for high levels of volatility on the euro, anything euro related, considering how from when London session starts, pretty much all the way up until New York, we're going to be having different news as well as speakers coming in and affecting the market. Friday, we're going to be ending off the week with a little bit of GBP stuff as well as the US dollar news at New York Open. And for those of you that are brand new, just got to put out a real quick disclaimer. We trade differently than a lot of people do. And so the concepts that you learn here, whether you're new to trading as a whole, or whether you've been trading for a while and you're just starting to tune into our sessions, be prepared to have your paradigm shifted. Understand that this is going to be a process that you go through that involves unlearning certain things that no longer serve you, and then relearning a whole new style. This isn't a strategy. This is a system and a philosophy. It's a way of thinking. It's a way of becoming one with the market. And just know that if you're looking to join the Pew Pew squad, we trade differently. Okay, so I know that a few of you are new. Someone asking, what is the FU candle? To put it simply, it's a candlestick like this where price breaches a certain area, stopping everybody out, and then we immediately see price get sucked in the opposite direction. You know, we saw this on pretty much every single GBP pair, right? Where we had this morning that big bullish candle stopping out so many people, and now it's almost as if we're getting ready to go and make a lower low. This is the FU candle. Okay, so we're going to be exploring it a little bit more. Don't feel like you need to know exactly what it is and how it works if this is your first time tuning in, because it's going to take practice, it's going to take consistency, and it's going to take more than just one session for you to be able to fully appreciate these concepts. For those of you that are new and that are looking to follow us, make sure that if you have the IML TV app downloaded, you follow our Forex channel as well as the crypto channel so that you can be notified anytime that we go live. We also do have a Telegram. You can find it in our frequently asked questions. It's something that we're using between now and when Pip Talk is all fixed and functional. And so we already had a couple of questions that got submitted prior to the stream starting today that we're going to be going over and just kind of tying in to the examples and the things that we're going to be looking at and what we're going to be studying. Just because I already have my screen up, are you cool? I'll quickly run through UCAD and then I can pass it over to you.
Yeah, that's you're good.
Okay, cool. So with USD CAD, okay, we're going to start on here, and this is something that, if we take a look on the daily time frame, we've just been ranging. If we were to drop it down into the 4-hour, we've got gaps that we're working with. We've got people who, if I were to just delete everything here for a minute, you're going to have those traders that are looking at this and they're like, oh, I need to make this thicker for the emphasis. But you're going to have traders that are looking at this and they're like, whoa, check out my trend line, bro. Look at how much respect I've got on that trend line. It's bounced and it's bounced and it's bounced. This is the perfect trend line. I'm going to buy it. You're going to have some people that are in that mentality, but who says that this trend line is even valid? You're going to have traders that draw it like this or like that. Have you ever sat there for like 10 minutes and you're like, oh, I need to get the perfect trend line. I just need to make it line up. Those times where you were already in a trade and you had to fidget around with your trend line to make it give you that extra confirmation that you weren't going to get stopped out. Been there, done that. It's not a very effective way to trade. And for us, we don't like to trade with trend lines or anything like that because all you really need is the price action. When we look at the market, okay, if we were to just focus in for a minute on the recent price action and what's been happening. One of the things that we talked about the other day is how USD CAD has just kind of been trading in this nice little range. And so yes, to a certain degree, that whole support and resistance idea would be valid, right? It would be relatively valid if you're looking at this market environment and saying to yourself, every time it came to the top of its range, we sold off. And every time that we were down at the bottom, price got bought back up. But what we need to understand is that anytime something like this happens, what's really going on is outside of the range. I'm going to use a different, I guess yellow is okay. But outside of the range, we have a ton of liquidity that is building up. I'm going to just get rid of that. I don't need it. But we've got a ton of liquidity that is building up beneath the range, but also above the range. Okay, because think about it. If you were trading inside of this range and you've been following USD CAD for the entire month of May, what are you likely to do anytime that you find a selling opportunity? You're going to enter your sell, and your stop loss is going to go above the high. It comes back, breaks you out at break even, maybe it stops you out. What do you do the next time? You enter, stops above the high, maybe a little bit higher. Price comes, stops you out, continues in the range. So we have people that are doing this on both sides. And you're going to have those traders that think that they're smart, and they go, okay, well, if I'm going to be buying it in here, or down here because price hit my trend line, I'm going to put my stop a little bit further. Rather than using a 15 or a 20 pip stop, maybe I'm going to go 30 pips, or 40 pips, or 50 pips, or 60 pips. Maybe I'm gonna be incredible with my risk, and I'm gonna go 100 pips. And they're going to be doing the same thing for those people on the opposite side of the market. So we essentially have an entire pool of money that is going to be building up on each side of the market. And what you need to understand why that's so important, especially if you're brand new, to really just grasp and tune into this concept, is because the large funds, the institutions, the bankers, they have to move price into those areas of liquidity before they can move price into their intended direction. They trade with such high lot sizes that I don't have the photo right now to pull up and show you, but if you think trading a standard lot or 5 lots or 10 lots is big, if you think that those kind of positions are large, that's retail trader thinking. Because in all reality, these institutions, they're trading with million lot sizes and above. And so they can't just come into the market and take a market execution and get filled all at one price. They literally need to scale in and scale out of their positions. Otherwise, we're going to see stuff rock the markets. And I've got one example that I can just kind of highlight. We're going to see stuff like this happen, okay, where the market just gets absolutely rocked by a huge manipulation candlestick because so much money was flooded into the market at one specific point in time that whatever broker or exchange the trade happened on, they simply did not have enough volume or liquidity to sustain price. And so this isn't stuff that you see every day. You know, generally when you're trading in the markets, it's going to be that nice up and down, side to side, slow and steady moves. And so if we come back to USD CAD, okay, and we think about what is probable, what might we see happen on USD CAD in the near future? we're going to go ahead, we're going to clean up the chart. Obviously, as we talked about, we know that there's going to be the retail traders that think that they're genius and that they found the trend line that is just, this extremely strong level. Personally, I feel like we're going to expect a little bit more downside prior to seeing price come up and clean out all of these highs. You might have noticed that there's a little arrow right up here. I've got an alert set at 1.3535. Okay, this is essentially where I'm looking for selling opportunities. It's about 130 pips above where price is right now. And so if we think about these liquidity grabs, right? They happen anytime that we get these equal lows and equal highs setting in. All that the liquidity grab is when price pushes slightly beyond those past highs to then stop people out of their positions so that price can be brought in the opposite direction. More often than not, we're going to see these and be able to identify them a lot easier looking at time frames like the hourly, the 4-hour, or the daily. Because I'm sure that we would all agree identifying how much consolidation has been happening on USD CAD here on the daily, very, very easy. Spotting it on the 4-hour, still pretty easy. Looking at it on the hourly, if you're on a computer, it's still fairly easy to be able to digest these candlesticks. But once you start getting into the 15-minute, the 5-minute, the 1-minute, you're very limited on how much data you can actually see. And if you're the type of trader where you're solely trading from your phone right now and you're learning from your phone, you're trading on your phone, you're watching the classes on your phone, you need to be incorporating these larger time frames into your analysis and into your understanding of what market environment we're currently in. Because without looking at the bigger picture, you're missing a piece of the market. And so that's why we use the larger time frames when we're looking for liquidity grabs. The signs of a liquidity grab, again, just once we breach beyond the upper or lower limits of areas such as this. And the cool thing is, what we're going to see happen a lot, and like I'm talking consistently again and again and again, you guys will even be able to go and notice it on like GBP pairs. I'm sure that when Jordan has the screen, that'll probably be something that he talks about. But you'll be able to notice so many times where price moves in one direction. Notice how price goes down right here prior to getting sucked back up to the top of the range. What happens? We create relatively equal lows. Price comes to the top of the range. What do we see? Equal highs get created. Where does price go next? Back down to the bottom of the range. We go slightly lower. We free up the money. We grab that liquidity. And then what happens? We come back to the top of the zone to then continue going higher and grab all the money sitting up in here. You can literally imagine a swimming pool of stops sitting above these highs. And once the money to the downside was freed up, it gave those institutions enough power to then buy. And so looking at this now, okay, the area that we're going to focus on is what happened when price broke out of the previous range that we were trading within. Notice how we have this one down candle right here. The one last candle that moved in the opposite direction prior to us going and making new highs. What we're then able to do is we can take our line, we can mark up the wick, we can mark up the open, and we can also mark up the 50%. And how you arrive at the 50%, that could be done in, just eyeballing it like I did. You could take your Fibonacci tool, go from open to close, right? Get really, really precise. If you wanted to do it like that. And what this is going to allow us to do is have an idea of how far price might go if and when we break that retail trading trend line that we've got. Remember the retail traders that think they're genius right now for buying it. We might expect then to see price dip down into the institutional candle that we're able to identify. Even if it gives us a little retracement, the sniper area for where we could be looking to get into the market for the bigger picture, the buy up to then sweep out these highs, right in this area. Now, of course, this isn't going to play out 100% of the time. We could see price come lower and test this candle. Right? Some people would believe that this is a more valid candle because of how strong that was and because there was very little wick. For me, though, I like to focus right here because it was that last move prior to us breaking the structure and coming higher. And if I'm believing right now that the bias is really to the upside, it makes sense that they're going to need to bring price down, free up the money, and then take us to the upside. And so to give you an idea of what a trade around this might look like, hypothetically, let's just say we were to enter right at that 50% line. We would give ourselves some room. Okay, even on a 15 pip stop, that puts us below the low of this candle, just with 15 pips. Like, that's not a huge risk. Our target above the equal highs. This is one example of how you're able to identify those 10 to 1 or greater reward to risk. And if you just so happen to get stopped out taking a trade idea like this, if this was a trade that you agreed with and that you decided to take and plan out and mark up, what if you get stopped out? Well, the beautiful thing about it is that if you still get confirmation within this area, price could come down and go 1 pip beyond your stop loss and test that other candlestick that we pointed out over here. It could do that. But if the trade still looks valid to you, you don't need to be scared. You can hop back in, use your same target, and because the reward to risk, it's not 2-1, it's not 1-1, it's not even 3-1. You can literally get stopped out 8 times, still walk away with profit. Not saying that you should be taking the trade 8 times if you keep getting stopped out again and again and again. But when you're finding these sort of trades where it's very high reward compared to how many pips you're risking, this is what's going to set you up for success in the long term. Because now you're not taking as many trades. Maybe you're only finding 2 to 3 opportunities in a week. But the quality on your trades is so high. And you're entering the market with more confidence, you're having less drawdown, you're having less anxiety. And it's stuff like this where it happens again and again and again. No matter what you trade, you're going to be able to find opportunities like this, but they're not going to set up every day. And so I feel like this was a really good example of, a sort of trade idea that we could see set up within this week. And so if we see price come down, one way to give yourself an opportunity to be prepared, you don't need to set a limit order or anything like that. You can, but I would encourage you, add your alert, put it on, and then that way you don't even need to have your eyes on the chart, and it's going to notify you if and when price gets into your entry area so that you can decide, is this still valid to take action? You need to make sure that you've already done your analysis and identified your targets, your potential entry, and your risk prior to you even getting into the market. Don't just try to eyeball it. Okay, really commit yourself and be disciplined, because it is quality over quantity with this trading system. And now I'm going to pass it over to you, Jordan.
Okay. All right, I'll give you a second. Right. All right, so let's start here on GA, because this is the trade that we've been working on and talking about for a few weeks now. And this is like the absolute perfect trade right now to prove, if anyone ever argues that the markets are not manipulated, this is what you can throw in their face. So watch this. Let's get my chair back. Okay, so and then Zachary, if I don't know if I still need to answer a few questions, because I know you're talking about like liquidity grabs and stuff. I guess just chat to me if I need to.
Okay.
Okay. So realize, guys, what we're looking at is focus points. They're focus points. They're focus points. Okay. And this entire trade right here, when we were up in this region, okay, we were up in that region right there. The overall objective was seeing this, your institutional candle. What makes a high probable institutional candle? If stops are raided. See the stops, see the candle that raids the stops, price flies up. Okay, that is how you know it is a very high probable institutional candle, because money is trapped in here. Okay, that becomes a target. Okay, it becomes a target. We were looking for sells off of the imbalance. Not going to go too much into that. We're looking for sells here. We're still holding on to these areas. Okay. The same thing that happens with the spike up, knocking out these areas of liquidity, fall down, mitigation out. Look what's created. Equal highs. Okay, equal highs. They are not your friend. Okay, it is not an opportunity. It is a target. You flip your paradigm shift to that, you will have bigger risk reward trades. You can trade these little equal highs and lows, but they're going to be smaller trades. Okay? So, what Zachary was talking about earlier, how they had Theresa May's little deal news event randomly come out of nowhere. Okay? Notice what that did. Okay? Notice how these equal lows are right here. Right? If our objective to the long term is to the downside, this up move should have never scared you. Okay? Immediately your eyes should have went back to where's the money sitting? Where's the money sitting? Okay? They put these obvious wick places, equal highs and lows, always around these institutional candles. Because what it's really doing, it's driving money underneath here, all in this area, all right here. Whether it's people buying off the W, protective stops below the low, or it's other people that are convinced that they put a stop underneath here. So in this example, a sell stop. Okay, a sell stop, they get trapped. Okay, news. Theresa May's news just randomly came out, popped the candle up, stopping these people out. Notice how I have a green line right here. Okay, if market comes back and pulls, I may look to take another position because the overall objective is the liquidity being cleared to the downside. This is more important. Do you really think that this is going to be a buy to continue going up? And they're going to leave this for everybody to win because the masses trades right here? No. 96% lose. The masses lose. Okay? So you got it's a whole story that's being put right in front of you, right? And if the overall objective is to the downside, they're going to constantly wipe people out that are trying to sell it. Okay? Look at I'm telling you guys, these concepts are so easy. You just got to practice them over and over again. Right? It's the same things. It's being drilled into your head. Look at this. Equal highs. They got taken out. Sell down. Equal highs. They got taken out. Sell down. Mitigation out of this candle. Okay? More equal highs are made. Okay? Sell down. Equal lows. Spike up. Clear these highs. Sell down. Marking the candle that caused that spike up. Okay? And it's like, just like Zach was showing, I mean, look at this. They literally manipulated it. Spike up. Spike up. Right back to these candles that are pushing up before the down move. Right? If you find yourself identifying the wrong institutional candles, then do this. Only identify this institutional candle. Here is your confirmation. Did institutional candle push up and clear equal highs or lows or an obvious wick placement? If yes, institutional candle is valid. Price falls. Okay? Look. If institutional candle pushes up clears highs, obvious wick placements, falls down, it is valid. Okay. GBP USD equal lows. There's a target. Where is the obvious wick placement? This sucker that's sticking out right here that everybody can see. Right? That's not that much space in between here. Guarantee you people buy the stop losses underneath. Guarantee you stop loss is going to be underneath this wick too. Paying out short swaps on EA and GA. Yes. Gold too. Gold is nice. Okay? But I mean, it's the same thing over and over and over again. That's what's awesome. Y'all keep staying on these streams, and you're gonna see these concepts play out so many times that eventually you're gonna be sleeping at night and you're gonna see it in your dreams. Okay? Right? See the up candle, down move, we close, we open all the way down here. Like a fat ass candle. Okay? But that's the thinking. Remember, if you're having struggle identifying the institutional candle, what was the up candle or down candle that took out liquidity, obvious wick placements, equal highs and lows, and then fell? Mark it. Mark that body. Okay. What was the up candle that stopped people out? Stopped out equal highs. Okay, up candle, stopped out equal highs, and then fell over. This is all trapped buys. Okay, so that's what makes a super probable institutional candle. Is it screwing people over? Right, because the masses loses anyway, so is it flushing out the masses? Okay, what do we have on gold? I got black circles, imbalance in the markets, equal highs. Okay, price targets to fill in the upside. But is our objective on the higher time frames done yet? No. Okay, do you really think that they are going to let this continue up forever and the easiest buy in the world win? Right? No. Look at this. Remember how we're always saying, I swear they're making these obvious wicks, equal highs and lows around these institutional candles. Here's another one. Okay? Weekly time frame. Smart money sell down to buy up. Look how fast price moved. Regardless, the objective is that there's money sitting right here. Right? I wonder how many buy stops or protective stops are here and sell stops are here. Okay? But on smaller time frames, yes, equal lows are right here. Wouldn't it be funny if we had the same thing happen that happened on GA to where it came up, filled this, and then sold down? Okay. Remember the imbalance here, right? The popular little trend line that everyone had that was bouncing all off here. Price comes up, fills in imbalance, falls over. How do you draw the horizontal line from the it's just these line tools. It says horizontal ray, or I'll use this arrow tool. Okay. Large institutional players do not recognize M's and W patterns, equal highs and lows, right? They just know that's where liquidity is sitting. So they drive price into them, right? They're freeing up money because in order for someone to win, other people need to lose. And if 96% are losing, why would I want to be on that side? Why would you want to be on that side? Oh, okay. So institutional candle, see how we identified it. So just like Zachary did in front of you with USD CAD, it's the same thing. You can go off the wick, you can go off the body, you can go off the middle of the body. The one that hits the most is the body, not the middle of the body, where the majority of the volume starts, right? Right off the open, sells down, buy up. This seems to be the one that hits the most. This seems to be the one that's most conservative. This seems to be the one that's most aggressive, right? But you just watch. Watch how it plays out. How do you determine imbalance? Imbalance in the markets is when price slips super quick. Okay, so watch. Notice in these hour time frames, price goes down, it goes back up, right? Goes back down, closes, opens, goes back up, goes back down, closes, opens, goes up, goes down, goes up, down, closes, open. But you see how this did not go up like this did. You got to understand that they use last area bank play what. Okay, so watch when I highlight this area. See how I highlight this wick, right? See how I highlight that wick. Okay. See how this wick's already highlighted? Now I'm going to highlight this wick. Okay. Notice how price comes up, sells off, but there was no buying offered here. Okay, it was just a straight sell. There was no buying offered in here. It's imbalance. Okay, we can move this up a little bit because this is the last point to where buying was offered. That's imbalance in the markets. Okay, same thing right here. Notice how price is selling down, wick, up, close, open, down, close, open, up, down, close, open. You see how we're filling in back and forth? This is healthy price action. Yeah, I'm trying to read in the chat. I don't understand what's being said, so I get lost and I go silent. But this is imbalance in the markets, okay? You got to understand that the majority of prices that are moved is all algorithm based. Algorithms are feeding price back and forth. That's how the banks move trillions and trillions a month in volume. Okay, but the algorithms, when price slips like this and there's no buying offered in this example, price is going to come back and fill it. Maybe price comes back and fills this area too before the continuation of the sell-off. Okay, and balance can be filled all the way past it. It's a target. It's a focus point, right? Just like equal highs, it's a focus point. It gets your eyes to look there. And we know that because there's no wick on that candle. Yeah, there's no wick on this candle, right? There's no wick. Just like I just put one here. There's no wick that's coming in that's offering buying in here. Same thing here. There's no wick that's coming in and offering buying in here. So this makes price inefficient. Price needs to come back and fill this area. Okay? Watch. See my little black box? This is inefficiency. Price was launching up fast. Like think about it. Price was launching up fast. What are they reaching for? If the overall objective of this is to the downside, what are they really reaching for? Right? They're reaching to help hedge their position further down. So they're reaching up in here to come in this area that we're looking to play, right? But while they're reaching for that area, price starts slipping, right? Price is moving way too fast. There's no selling offered in here. It's just straight buys. There was selling offered in here, price slips up, and then price really slips up. Okay, the last place that there was selling offered was right here. This becomes a target, right? This is where price needs to come back and fill in. Whether it's halfway, the full way, doesn't matter. But it becomes a target. Okay? So what this should be opening your eyes to is really just how the markets really truly move. Okay? Right? You've got equal highs right here. You've got equal highs here, equal lows here, a candle that pushes down liquidity capture runs. Okay, so we note this area. Okay, we noted this area last week, right? Me and Zach were talking to y'all in front of it, or in front of y'all, and marking up the dollar during like the 5-minute break, right? We were identifying where money could sit. The up candle before the down move. We almost reached that up candle. We reached the wick of it. Okay, now price is falling. Okay, but really what should have convinced y'all that these prices are really, or the markets are really rigged and manipulated is that random Theresa May's news that they announced that came up and flushed out equal highs. Right, flushed out equal highs. Did it do it on everything? So let's see. Right.
I think like GBP CAD was one of the only ones where it was a little bit different structure, and GJ2 maybe. But they're all getting ready to take out those lows.
Oh yeah. See, it's like they're like, look, we still have this area marked. It's like they're, I swear, they just falsely give you these M's and W's. Some work, some don't. But really think about who's chasing them. Your support and resistance traders. Okay, those the moves work. They're just smaller, right? These kind of trades offer huge risk to reward trades. Okay. Here was a AUD news trade. Same thing. It's the same thing, same concept, same thing every time. Your institutional candle. Okay, your institutional candle here. What makes the institutional candle high probable? If it's being bought up, equal highs. Okay, see it? Bought up, equal highs. It starts to fall, right? What do they make around the institutional candle? Areas to put stops in. Price comes up, hits that candle, hits people's stops because they're above this obvious wick. See it? Obvious wick, and then falls for AUD news. Okay, but it's just over and over and over and over again. Right? Like, I love this example that Zachary was talking about. Right? This was USD CAD a couple, or like, what was it? Like when was this? Here. So in April, we were tearing USD CAD up.
Yeah, all of April.
So it's just like, watch how they mitigate this stuff out. Right? Here, they sell down, they buy, it flies up, they mitigate out here. Okay? Where price is digging to, I mean, what if it comes underneath here? Right? It's the same thing over and over again. The daily, flush down, that was the bigger move, right? Seeing in everything that we're marking, but you can see the actual chunks of orders when you start zooming in. The only problem with zooming in and not understanding what's really the bigger picture is you can get psyched out. Okay? But this is on the daily. They are just working price up higher and higher. Right? Here's the up candle, down move. Right? Where it really starts. Moving up before the big sell off. Okay? So it's like it's the same thing over and over again. It'll make sense. It'll start making sense. It really will. But the biggest thing that everyone here should have, like that aha moment, is, how many times have you been stopped out and then price goes the other way? I'm sure a lot, right? It's everybody's problem. But now you know why. The 96 percenters lose. You don't want to trade where they are. You want to be taking their money. You want to be using their protective stops as your entries, your orders. This is all a psychology game. Not everybody can win. Okay? With this, we are all in this to make money. You got to take money from someone else. Okay? So why not trade where the big players are trading and take money from everyone else who they're taking money on? Okay? So I don't have anything else to add. I thought that was good. So look for GBPs, all to take out those lows, equal lows. I really hope this is the top of euro odds, so we'll see. Can you please show some risk to reward examples? Sure. Right, even though we're targeting for down there. Stop. I don't know if you're going to use a limit. Your stop would be about, I'm going to actually show you how to do this. Okay, you're playing off of this area. Measure. Okay, remember how we were talking about the 50%? Okay, so that would be your last resort entry. Okay, your stop loss, it's up to you how far you want after the 50%. A great rejection area won't really go past the 50%. Okay, so if you want to be safe, there you go. Have a wide stop loss over the high. Turns it to a 4-to-1 trade where you can work anywhere in between here. Okay, but if you want to be like amazing and really have amazing risk to reward trades, you got to learn how to play 1 minute, 5-minute price action, which we show you that here. Okay, and we're not even done with the target yet. Okay, so equal lows taking out and wherever that weekly candle is. Okay, so there's one. Same thing, same concept, same everything, right? What do? We're targeting this area, the same thing that we're doing on gold on the weekly, but this time it's on the hour. Same thing. Gold's got weekly or even lows. So does this. So same thing. Could add here. Play off the price action. Okay, so full target. There you go, 27-to-1. These lows, 24-to-1. Your entry could have been here as well, as we talked about and called that out. Same thing. Okay, like you got to understand when you're sniping these entries and you're sniping where banks play. Do you really think the banks are going to use a stop and price is going to pull up back to where they are? No, right? So if you're sniping the correct spot, that's where your stop loss can be above the high. Usually it's like a 5 to 10 pip stop. Okay, and you'll see those 1 minute patterns. I already did check GBP USD. It's going to take out the lows. You're going to see those patterns form on the 1 minute time frame. Okay, but there's a couple examples of risk to reward. This is what we're looking for on Euro odd that we've been talking about for a minute. We just got to find it. Okay, so like I said, hopefully this is the high. That'd be awesome. It should be about there. Stop loss. Okay, and Euro odd was something that we've been talking about for weeks as well. Okay, filling in this gap to play it safe, we'll say here. Can you show me your 1 minute, 5-minute? Where I played it, hopefully I can. I don't know if it's too far. All right, perfect. Okay, so if this is the area that you're looking to play on gold, remember it's that 4-hour area. Look at the 1 minute structure that got printed. I mean, that looks like a pattern that's oh so popular to press sell on. See if I can find it on this one. Okay, same thing. If this is the area that we're looking to play, right? This looks like a pattern that you would trade, right? Whether you snipe here above these highs, right? And notice how it sweeps the highs, or you're like, okay, this is the candle that swept the highs and then fell over. Huh. Pew pew. All right. Okay. All right. So hopefully y'all had massive breakthroughs today. That's our only goal and job, is to make y'all independent traders so that y'all can really understand these markets, not chase, animal patterns and stuff like that, but really understand these markets, right? Why price is moving the way they do, proving over and over again that the markets are manipulated and controlled. This isn't some decentralized environment where everyone has a free opportunity and chance. You got to play where the big dogs are really playing and play with the whales, right? Because they're the biggest in the ocean. That makes sense.
It does. Just remember, they're going to do everything in their power to make your stop loss do this. And as proficient traders, our objective is to be able to identify these opportunities, trade with the institutions, and be able to play our horns like this. And so I had a lot of fun on today's session. There was a ton of value. I feel like the title for this one will be Lesson on Liquidity, because we went really, really, really in depth. And I feel like with all the examples that were given today, this should give you guys quite a bit to study moving forward. And so with all of that, I want to thank each and every single one of you that was here on the session with us today. If you were tuning in for the first time, remember, you got to keep coming back. You're going to get it, but it's going to take some time, consistency, and practice on your end. And if you don't already have this schedule, I would highly encourage you to take a screenshot of it. Right now, we're finishing up our Power Hour session right here. And so tomorrow, we have both our crypto session at 12 p.m. Eastern, and then we have our third Power Hour session of the week. And so thank you guys again. Hopefully you have a phenomenal rest of your day. And we'll see you guys tomorrow for more paradigm shifts, more trading opportunities in the same time, same place. Don't forget to